The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning. It is Thursday here on the Small Cap Roundup, and we've got what's going on out here in the market. We've got some earnings news. We've got Morgan Stanley really trouncing some of those estimates. But, you know, even after you had some good news from some of the financials this morning, you did have stocks trading lower, but interesting what happened. We had the IMF out there doing a little media tour. You had Christine Lagarde doing an extended interview this morning. I saw her interview with Bloomberg. I believe she was also on CNBC, just talking up what the IMF wants to do to save Europe. And as she was speaking, the markets major indexes did return to positive territory. So, you know, sometimes it's difficult to draw conclusions about exactly what does cause these moves. I've joked about that on the show before, that, you know, it's so tempting to want to attribute a market move or a stock move to something specific in the news. But, yeah, it was just curious. It was just interesting that as she was on television speaking optimistically about Europe and what the IMF could do, and talking about raising some more capital, perhaps even bypassing some of the sovereigns, et cetera, some of the ideas she was discussing on there, that U.S. major indexes did turn higher. So it looks like we are in positive territory at the moment. So also, interesting news today. Got a couple of interesting IPOs that are out there today. You've got, well, let me start. I put a chart of IWM, the Russell 2000 ETF up there. So, yeah, showing some gains so far this morning. So let me see here. I'm going to put a chart up. I don't even know if I'll be able to get these because they're very new, a few hours old. Okay, so there's Tumi, T-U-M-I. And that's kind of an interesting company because it's basically a luggage maker. And what this one does is high-end briefcases, computer cases, that kind of thing. And you know, you've had some interesting companies from the non-tech world that have had some very successful IPOs. Bunny, BNNY is the ticker on Annie's IPO. Let me go to that for just a moment here. And there you can see a daily chart of Annie's. Let me put it up here on a weekly. And I should say, I kind of buried the lead this morning. We do have the Low Price Leaders newsletter is now launching. You can check that out for free on the homepage of TFNN.com. So take a look. The reason I focus on IPOs is you'll see a lot of these stocks that have relatively recently begun trading on the market are some of the ones that show the best price gains over time in the market. So by that, I don't mean that you jump into an IPO and it naturally or normally will just vault higher and, you know, it's your lucky day winning the lottery. What I mean by that is, if you look at stocks that have gone public over maybe the past 10, 12 years or so, in some cases even a little bit longer, up to about 15 years, these are frequently among the best gainers in the market. The best price leaders, the best fundamental performers, just overall those showing the best leadership. Now, of course, you can come in there and say, well, Kate, Apple went public much longer ago than that. Well, yeah, I'm talking about maybe 80% of the market leaders at any given time do tend to be those that have gone public in the past perhaps 10 or 12 years or so. So just keep that in mind. So that's why IPOs are often a very, very fertile ground for identifying potential winners to add to your portfolio at the right time when they emerge from a sound chart base and are showing the really requisite fundamental strength that attracts the institutional investors. So there, you've got Bunny, B-N-N-Y, Annie. Annie's the natural foods company, and that's had a successful IPO and is holding right near its highs. I want to just go back to this chart that doesn't really tell you very much, but what the heck? There you go. Actually, that's a weekly of Tumi, T-U-M-I. Go back to a daily here. So yeah, so this, they design premium travel, luggage, briefcases, computer cases. They priced 18.8 million shares at $18 a piece. So that was above the $15 to $17 range that it was planning on. It's listing on the NYSE. It had Goldman Sachs, Credit Suisse, and J.P. Morgan as some of the lead underwriters there. So some of the bigger investment banks. And when you see some of those bigger investment banks, maybe not some of the regional boutiques, that's often a sign of an IPO that the big institutions do have confidence in, that they are willing to get out there and promote in these road shows. Not to say that an IPO that perhaps a more boutique investment bank underwrites can't also be a winning stock at some point, but it's just it's sometimes interesting when you do see the bigger banks, the bigger investment banks do get behind a new IPO. So you have Tumi there. The other one today is Splunk, and I think the ticker on there is S. No, let me see here what the ticker is on Splunk. I'm not sure. Maybe it's SPNK. Let's see, kind of doing this in real time right here. No, you know what? This one actually, this is a data management company. I'm going to go back to Tumi just so we have something up there on our chart on Tiger TV, so everybody has a nice picture to look at while we're talking here. Now, Splunk is a data management company. Basically, there have been a lot of these names in these new generation of data management systems that are coming online along with this revolution in cloud computing. So Facebook is one of Splunk's customers. Got some other interesting ones here: AT&T, B of A, Visa, IBM. It's interesting. So this one, too, priced above its range at $17 a share. So I don't have much more information on this one right now, but just a couple of very interesting IPOs that I'm sure are going to be worth watching in the coming weeks. So what I want to kind of talk a little bit more about then today, as I mentioned, we just launched the Low Price Leaders newsletter. Now, in addition to the lower price stocks, I also do track the small cap names, a lot of the names that perhaps are a little bit more thinly traded, not always the household names that you hear about, not always the ones that you might see covered incessantly in the mainstream media. I really like to kind of ferret out some of these undiscovered gems. We've had an interesting time in the marketplace right now. And let me see, I'm going to reload my screen right over here. While I'm speaking, I'll go ahead and just refresh my screen. So a lot of the stocks that we are talking about in the Low Price Leaders newsletter are some of these that maybe, let me see, I've got one in front of me right now, and I'm going to put a chart up on Tiger TV, and I'm hoping that I've got my charts back here, and you can see it. I've put up a chart for a company called SourceFire, F-I-R-E. Now, this one I've talked about before. It's a network security company, and this one has a market cap of $1.5 billion. Not bad liquidity, 681,000. I believe I talked about it yesterday when I filled in for Larry. And it's also, this is one of the companies that I do mention in the first edition of the Low Price Leaders newsletter. Now, this falls under the small cap category more so than the low priced. It's trading right now at about $51.30, and actually about about 51.15. The latest tick that I'm seeing right there. Now, this one is just about in buy range, cleared a buy point a few days ago. I'm going to reevaluate this one a little bit later today and make a decision about whether or not I want to add this stock. Now, one of the considerations at this juncture is, of course, earnings season. And stocks can either get a huge move up on something in the earnings report that Wall Street likes, or it can get smacked down pretty hard if there's anything in there at all. If there's anything about pressure on margins, even if the company beats views, if you have, say, for example, pressure on margins, any hint of slowing business in any of its regions, for example, growing competition from other rivals, an outlook always. I mean, the outlook is the biggest thing. That's the most obvious area where stocks can get punished if there's anything that's perceived as being at all disappointing in the earnings report. So this one reports, it's confirmed, it will report after the close on April 30th. I don't mind jumping into a stock and taking a quick trade. In fact, on some of the smaller names, on the lower price names in particular, I really do set price targets, initial price targets on those of about 10% or so, because it's just very, very important not to get greedy, because when that starts to happen, you really can just see all your paper gains evaporate, and you wonder what happened. The thing, I'm a big fan of, if you can call yourself a fan of a trader, but I have long followed the writings of Jesse Livermore. That was part of the training I got in all the years I spent in Investors Business Daily. I was over there for 10 years. And, of course, Jesse Livermore, one of the big influences on Bill O'Neill. And, of course, Jesse Livermore had his problems. He made his mistakes. He was personally, I believe, a very troubled man. He did end up taking his own life, sadly. But he did contribute to the body of knowledge about trading and investing. And I believe the idea of keeping your fear, hope, and greed in check were really concepts that he emphasized quite a bit, and that's also something that really became indoctrinated in me in all those years at IBD. So SourceFire is one I'm going to take a look at a little bit later today and see if that's a position to enter into. And we'll come back. We'll look at a few other small caps right after this break. I've got a number of stocks we're going to look at today, a number of charts. So I will be right back in just a few minutes. If you want to give a call, 877-927-6648.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks, Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, back again here on the Small Cap Roundup. My name is Kate Stalter, and just a reminder, because I just can't say it enough, we've launched the Low Price Leaders newsletter. It's on the homepage of TFNN.com. It is available for a free look-see these days, so take a look. There is more information on the homepage. So I've put a chart for another stock up there that I've talked about quite a bit in recent weeks, and that's just the way it is. A lot of us hosts here on TFNN.com, if there is a stock that we're following, we will be talking about it quite a bit. I always have new ones to work into the mix, and I have a few today that I've just recently have popped onto my screens. But Buffalo Wild Wings is really sort of a perennial growth favorite. And what's interesting is, a lot of these growth leaders that have been around for a long time have steadily joined the ranks of perhaps the mid caps, even grown to become large caps. Not so much this one. This is still a market cap of hovering a little bit below 1.6 billion. Moves about 739,000 shares a day. Now, it is consolidating after pulling back from a recent high. I really like the longer-term potential on this one. I think it's just one to keep watching. Using my trading methodology of buying into strength right now, as it is continuing to trend lower, you're looking at a weekly chart right here. It is not near a buy point right now, that could happen before it does get to that old high. You don't necessarily have to wait for it to reach that prior high. And let's see, the number we're talking about there is 94.81. So, you could have some sort of pocket pivot action or moving average cross that could give you an earlier buy point. Right now, with the market still in indecision mode, with a lot of watching the developments in Europe, economic data here in the States, earnings season underway, just plenty of room for indecision. So still calling this a market correction, even though you have had a little bit of upside trade recently, but of course not yesterday, but in the past few days, not necessarily looking at the action one day at a time and making a decision based on one day's trade. That's not typically what I am going to be doing. So I want to just interject. I saw some news here a moment ago. I was looking for the Splunk chart a few minutes ago, and I knew that it had not yet opened. It was going to be a stock that was opening late. It is just now opening in the last few minutes. So took a while to get all the pricing straightened out and get everything in line there. But apparently Splunk is now open for trade. It's NASDAQ listed. And I noticed here, okay, so let's see. Okay, I've got a note here. Splunk up 1450. Okay. Yeah, there's been so much anticipation about this particular stock. No big surprise there. I saw a note in the Tiger Den too about Toomey that I just want to come back. I saw I can't remember, somebody wrote it a few minutes ago, and I was looking at this over the break about owning some Toomey products and having them be very good products for many years. Actually, it's interesting. I heard one of the anchors, I believe it was on CNBC, saying the very same thing, that she had bought a Toomey bag years ago, and it was continuing to be a good product. So we've got a lot of people out there giving unsolicited testimonials for their Toomey bags. So that's interesting. Always nice to hear about not only a potentially interesting and profitable stock, but also potentially interesting products that I might want to check out. And, one of the long-time determinants of a winning stock is a company that makes a unique product or service that is in demand and is something that its own product offering does continue to attract customers. That in turn attracts institutional investors. So it's all making sense. It's all fitting together. Buffalo Wild Wings, that's another one. You've got an experience there that the company has been very careful to create with its menu, with the environment in the stores, just capitalizing on the casual dining phenomenon. So again, you can really go through all of these companies, no matter what industry they're in, and understand what it is that is the value proposition that's attracting customers, that in turn attracts investors. Okay, I will be back with more of the Small Cap Roundup right after this break.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. And these are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, back here with the Small Cap Roundup. I'm just going to keep updating you on how Splunk is trading. I think that's what I'll do. The ticker is SPLK. It is up $16.81. Actually, up. Just my screen just changed. 1688. That's almost 100%. 99.29%. Okay, so that's how Splunk is doing. I'm not sure. I wonder if the name is derived from spelunking, climbing, caves. I don't know. But Splunk. It's an interesting company name. Let me give you a little update here on Toomey. Let's see. So looks like 2803, and I believe where did I say that priced at? About, it was either 17 or 18 where that one priced, so that's at 2804 right now. Okay. Oh, I was looking at Buffalo Wild Wings before the commercial. I just wanted to finish up one thought on that earnings season. It reports April 24th after the close, so that would be next week. So, this is a stock that has historically made some big moves as a result of its earnings report, either up or down. I was talking with Tom about this when I was on his show a couple weeks ago, that one of the things that's funny is that with Buffalo Wild Wings is that the analysts are forever either upgrading or downgrading the stock based on the commodity costs of the chicken wings. So that's just something, that constantly seems to be mentioned with regard to Wall Street's analysis of that company, the commodity input costs there. So just something to keep in mind. So, okay, yeah, I'm getting a note here just on the Tiger Den, just 15% afloat on Splunk. That has been the trend with a lot of these IPOs lately. Very, very small percentage of the float made available in the IPO. So, of course, you're going to frequently get a nice pop based on that. That's one of the reasons, by the way, that I do like to give a new IPO a little time to establish a trading history. I mean, I've said it many times. It's always worth repeating, though, just as a reminder, because there is so much excitement about some of these new issues, that it is worth giving a stock a few weeks. Sometimes it even only takes maybe 2 or 3 weeks. Sometimes it can take months for a new issue to correct in the marketplace. Not uncommon at all for a stock to race higher on its IPO, then pull back as some of those initial buyers do flip the shares, take some profits very quickly, and then you do see the stock form a consolidation. Google was a great example of that back in 2004 or 2005 when it went public, and it formed a consolidation relatively quickly and then did allow a buy point within, I believe it was within the first few weeks or so, for a new, and I do have a Lumber Liquidators chart up there, by the way, because I am going to talk about that in just a moment. So just letting everybody know. So that's Google was back in 2004, 2005, formed a correction pretty quickly, and did allow more aggressive investors, more observant traders to jump in there and grab some shares. That worked out nicely. So Lumber Liquidators, that's the chart that that I put up there because I was going to start talking about it right after the commercial. I got sidetracked on a couple other things. Okay, this is one that, let me see, I've got a weekly chart up here. It's been forming a little consolidation lately. Let me see here. The prior high was 25.50. It is now trading just pennies below that, 25.43. That means this is another one that's in buy range. Okay? Now, a couple things just to notice. You do have some overhead resistance on this one that's less than 18 months old. So that's something to just keep in mind. There is something going on right now with a lot of the stocks. It's a lot of the stocks that I'm looking at, I'm finding are showing one of two, not patterns, but one of two characteristics, neither of which is really ideal. Okay, and it just has to do with, we had a big rally in the markets in the first quarter. You had a lot of stocks, Apple, for example, that were continuing to move higher out of late-stage consolidations. In other words, continuing to move higher. And I'll put a weekly chart of Apple up here, just because we haven't seen it enough. Nobody really ever talks about this company. What it did was it continued to form consolidations along the way higher, with higher lows along the way. And historically, when you're not in an era of quantitative easing, what higher lows have meant is that a rally is running out of steam. Now, sure, eventually, did Apple's rally run out of steam? Yeah. Okay. Who knows how long this is going to last, if it's actually going to be prolonged enough to be a base or just be one of those quick pullbacks. Absolutely cannot say at this point. But nonetheless, it did, not even looking at what's happening these days, it did continually run up higher after pulling back with higher lows. Okay? So that's not really historically what tends to happen in the market. So let me go back here to Lumber Liquidators. And we've got a weekly chart of that on the screen. Now, this is showing something a little different here. This one is still emerging after pullbacks here previously, and does have quite a bit of overhead resistance. But really, what matters is the past 18 months. And unfortunately, in this case, you're still in that zone. So that does give me a little bit of pause on this particular name, even though at this time it is showing very good chart action, bouncing off that 10-week moving average, being in technical buy range at this moment. Pretty good earnings estimates ahead, double-digit earnings growth in the next 2 years. This company operates flooring stores. I'm familiar with them. I know they were in California. I've seen them there. Number 46 states, so they're pretty much everywhere, actually. And this one, you've also had some not bad volume as the stock has bounced higher. You had some heavy volume earlier in the week as it did make a nice move up. Now it's pulling back just a little bit. The thing that I feel okay about waiting at this point is that it has been pulling back in the past couple of sessions. So I'm not in any big hurry to jump in there at this point. I would wait again for it to perhaps surpass that 25.50 level. So I'll just wait and see what happens. In fact, let's see. The new high you'd be looking at is 25.74. That was an intraday high yesterday. I don't know that I need to necessarily wait for it to get back up there, but I do just want to see if it continues to pull back at this juncture, perhaps form a little handle area to that recent consolidation. That could be the case. So I'm just kind of in wait-and-see mode on this particular stock. So that's Lumber Liquidators. It reports earnings. I believe that's also coming up pretty soon. Yeah, that's on April 25th. Okay. So let me move on. That's just a good look at a little flooring company with a market cap of $701 million, trading 566,000 shares a day. Isn't it always kind of interesting how some of these companies with these brick and mortar presences, you just think they require a whole lot of capital to run these operations with real estate and inventory, and here they come in with a market cap of $700 million. And okay, so I want to move on here. Here's one that I don't think I've talked about very much. Now this one, let me see here. This is National Research Corp. NCRI, and I'm about to put up the ticker right there on Tiger TV for you right here. Let's see, NCRI. Okay, and that's NRCI. Sorry about that. I got the ticker wrong. NRCI, National Research Corp. There you go. And you can see that big move up in the last few days. Now, this is a stock that, let's see here, good earnings growth in the next couple of years. This had really only recently jumped onto my screens. It hadn't been one that I'd been tracking previously. A lot of volatile trade in this one, and that is something that frequently will mean that it's just not something that I'm going to be looking at, because it's just, frankly, with the smaller companies, market cap $316 million. Tiny, thin trade on this one, 6,500 shares a day. Those are not really my favorites because, they obviously, for clear reasons there, just tend to be extremely volatile. Now, this is one of those that it's from the healthcare sector, and it provides measurement services for various healthcare clients. And when I say measurement services, really metrics, really performance metrics, that kind of thing. One of those consulting firms. It's essentially a consulting firm. Let me see here. They report earnings not until May. So that one, you got a little time on that one before you get another catalyst there. And let me just see right over here. As I mentioned, this had not been one that had really been on my screens very much because of that volatile trade, but it is obviously one that is moving up. When it reported back in March, it did beat analyst estimates. Let's see, that was back on March 8th. So that was about the time, if you're looking here on, I'm going to put this back on a weekly chart. and just take a look at this one. And right about, let's see, that would have been back in here, is when I'm kind of indicating it there on Tiger TV. That was the first week where I've got the cursor there, where it began rallying out of that most recent little area of consolidation when it did beat earnings views back in March. So a little bit of this is an interesting stock, not in buy range at the moment, clearly, but it is one that just popped up onto my screens. And to be honest with you, this may or may not be something that I really pay a whole lot of attention to, just because of this volatile trade at the moment. So let me see here. And the thin trade, something moving 6,500 shares a day. You know, risk management is a very important component of my methodology, and 6,500 shares kind of tends to fly in the face of risk management. Okay, let me put up another one here that I've been tracking for a long time, and one that I like quite a bit. Market Access, MKTX. Now this one here is, let's see, market cap nearly 1.4 billion, moves 310,000 shares a day approximately. Now, this is an electronic trading platform, electronic bond trading platform. Now, you notice it had a big move down back here. I'm going to put this over on a daily chart to show you. I've been studying this one for a while. Notice this. You had this big downtick back here a few sessions ago. That was the day that BlackRock said that it was going to be launching its own platform. And as you see, you could see it very clearly here on this chart. You can see that it pulled down, it sliced that 50-day average, and you did have heavy volume as that happened. But then what happened here? It rallied back. So a lot of that daily trading volume was the stock rallying back. It actually ended up not losing that much on the session as sort of the initial emotions calmed down. People realized that there were a lot of some analysts coming out, some investors coming out saying, and the company saying that this BlackRock's move would not necessarily impact market access as much as people had thought. So it's kind of resumed its trading pattern here above that 50-day line. Let me see when this one reports. Let's see, market access. Let's see, MKTX. And let's see, this one reports earnings next week. Yeah, I thought that was pretty soon. 4/25. I believe that's next Thursday. That'll be before the open. Let's see. Or if I'm not, it's Wednesday. Next Wednesday, before the open, this one reports. Analysts are expecting quarterly income of 36 cents a share. So that would be a nice year-over-year gain in earnings if that does come to pass. And of course, I think on a company like this one, where perhaps you have some increased competition coming online, it might be some of the company statements, forward-looking statements about business, will probably be of great interest to the market. Okay, well, this segment flew by. That always happens when I'm kind of looking at some of these charts, talking about what's coming up. I'm Kate Stalter. We have time. If you want to call in, we can take a call, 877-927-6648. Be right back with the Small Cap Roundup after these messages.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, back with our last segment today on the Small Cap Roundup. I want to take a look at just a few more stocks that have been hitting my screens. And really what I'm trying to do is just give you a little a flavor of what we're doing in the Low Price Leaders newsletter, just taking a look at stocks that are forming good consolidations. Sometimes I'll even look at stocks that are extended but are worth continuing to watch for their next pullback that might offer a buy opportunity. Let me put a chart up here on the screen that I've been taking a look at, and I looked up some news for this one over the break. This is Cadence Design Systems, and this is one that I've actually known about for quite some time. This is a mid cap. However, it right now just barely it's squeaking into the low priced category, because it is trading at about $11.69 last tick. So that's how this one makes it in here. So some of these lower price names, obviously they are going to be a little bit larger market cap than simply under that $2 billion level. So Cadence Design This is a software company. They make designed for the circuit industry, other electronics products. Now, this is one that, let's see, it's consolidating right, I'll tell you where it is, relative. I've got a daily chart up there, so it's just a little bit, it's about 1% below its 10-week moving average. You can see on here on a daily chart, it is below the 50-day, which is roughly the daily equivalent of the 10-week. So this one, I was just looking up a little bit of news about this one. The company's vice president of finance is going to be speaking at a Jefferies Technology, Media, and Telecom conference in New York, and that will actually be online, and that's happening on May 8th. Now, what's interesting about that may sound like kind of a big so what at first glance, but what's interesting about that is when these companies go to these investment banking conferences and they present what is going on at the company, presenting new initiatives, perhaps new products. Obviously, they're presenting before the banks because they are looking for some financing for some new projects. That gets them in front of the analysts. It boosts their analyst coverage. It gets the investment banks interested. It gets the professional investors interested. I've seen this over time. I've noticed this a lot over the past few years. You'll see a stock that will make a significant price move higher in some volume, not reporting earnings, nothing really going on newsworthy in terms of any big announcements that day. So I'll go back and I'll look and I'll say, oh, what happened there was they were presenting at an investment banking conference. And I've been to a couple of those, actually. And it is interesting. You do have some of the company representatives talking about some new projects in the works. So it does make sense. You can see why the bankers would get interested and begin touting the stock, and the institutions would jump in. This is forming a very nice consolidation right now. Terrific earnings estimates for the next 2 years. I have a few seconds left. I want to try and look this up here, and I'll tell you when the company is expected to report earnings, if I can pull this up in time. Let's see here. Good track record of triple-digit earnings growth in the past couple quarters. Okay, yeah, this is another one that's coming in next week. It looks like April 25th. So some developments in the works on Cadence to watch out for. But this is one that I like right now, just in terms of a watch list candidate. I'm Kate Stalter. This is the Small Cap Roundup. Thanks for joining us today. I will be back with you on Tuesday.